I'm Stephen Engel with David Ingles in Hong Kong. Obviously, we've been listening to Donald Trump and Sanae Takaichi-san, the new Prime Minister of Japan, having their greetings to each other in Akasaka Palace as Donald Trump begins his visit here to Tokyo. He arrived late yesterday at 5 p.m. local time, and then this morning, as you can see, being greeted by the new Prime Minister at the palace entrance there. The two talked warmly about their affection for the slain former Prime Minister Shinzo Abe, and Donald Trump had similar warm words for Abe-san. They immediately both talked about the military capacity, and Takaichi-san, known to be more of a nationalistic leader, wants to increase her defense budget. She says, continue to shine as the leader of a strengthened Japan, Japan's national power, namely diplomacy, defense capabilities, economic power, technology, intelligence, and human resources. Donald Trump responded by saying he always loved Japan and the relationship will be stronger than ever, and also praised the orders that Japan has had for military hardware from the United States. Donald Trump concluded his comments by saying the United States is an ally at the strongest level with Japan. David, and let's also bring in Tobias Harris, founder and principal at political risk advisory firm Japan Foresight. Tobias, what are your immediate thoughts about the warm greeting the two leaders are having and the building of this relationship?
I think certainly the tone that we saw was a little more fulsome from the president than we had seen when he met with Ishiba earlier this year. And, you know, the specific praise for Takaichi as a leader who's committed to strengthening Japan's defense, I mean, that I think will be very useful for Takaichi to say, you know, look, I'm strengthening our ties with the United States, and that was recognized. And I think just sort of the personal touches, of course, you know, clearly I think going into this meeting, there was going to be a lot of bonding over their shared affection for the late Shinzo Abe. We obviously saw that on display. That clearly is going to be just a useful connection between the two of them, because I think there is genuine affection that they do share. You know, of course, Abe being Takaichi's mentor, and Trump, I think, really having, you know, really genuinely warm feelings for the late Prime Minister. So I think clearly that is useful as they set about trying to build a relationship. And just, I think some of the you know, reaching out and saying, you know, call me anytime you want. I mean, I think just some of those personal touches that seemed missing when Ishiba met with Trump earlier this year, I think that's going to make a difference in terms of how this meeting is received at home.
What do you think of the fact that defense spending and defense capabilities were so high up in Takaichi-san's comments? Again, this is a controversial subject to raise military spending and defense spending given the pacifist constitution. But again, is 2% of GDP on defense spending going to be enough to assuage Donald Trump, who wants his allies in this part of the world to pick up a bigger part of the check?
It's a big question, and clearly Takaichi, you know, she took over last week and made very clear from really the moment she became Prime Minister that she was going to really try to send a signal that defense spending is going to go up faster than planned. So there's already talk about trying to get defense spending to 2% of GDP during the current fiscal year instead of waiting until 2027. But of course, you know, the real challenges are, it's not even so much the pacifist constitution, but really more the question of how is Japan going to pay for it? Because you did have a consensus that yes, more defense spending is in order, particularly after Russia's invasion of Ukraine. I think there was really it was a wake-up call for a lot of Japanese people. But you would look at polls and they'd say, yes, of course, more defense spending is great. But when asked specifically about how to pay for it, whether that's higher taxes or whether that's running more debt, whether that's finding ways to cut spending elsewhere, there was not a whole lot of consensus around that. And if you couldn't get to that, when it comes to 2% of GDP, getting beyond that is going to be a real challenge. And back in 2022, Prime Minister Kishida had majorities in both houses of the Diet. Takaichi does not have that luxury. So there's some real questions. It's one thing to say, to President Trump, yes, I want to raise defense spending. This is my priority. I'm going to work towards this. But really, whether she has the political capital to really get it done, to really make a huge leap beyond 2% is going to be a challenge.
Now, Tobias, does she have enough political capital and popularity and also flattery to Donald Trump to possibly reopen negotiations of the trade deal for a 15% tariff in exchange for a rather opaque $550 billion investment fund into the United States, of which we've not gotten a lot of details?
I don't think she's going to be in a position to renegotiate at the moment. And she got in, a bit of hot water during the LDP leadership campaign when she suggested that she'd be open to that, and then had to walk that back, quite hastily. Really saying that no, actually, I'll work within the framework of the agreement if there are any issues. And so I think right now the priority, certainly through the end of the year, is really figuring out how this joint investment process is going to work. Because of course we have the MOU, but there are a lot of questions about how the investment committee is going to work, how the projects are going to be identified, what role exactly Japanese public financial institutions are going to play, how much money are private companies going to put up, how is the president going to select projects. There's a lot of questions that have to be sorted out. Of course, then there's the questions about who gets what returns from that are generated by any projects. And so I think right now the focus is let's figure out what exactly we've agreed to, how this process is going to work. And yes, if there are questions about the fairness down the road, I think then they'll take it up within this framework. But I don't think that she's going to come right off the bat and try to renegotiate it. I just don't think she's going to be wanting to take on that challenge right now.
Tobias Harris, thank you so much, sir, for waiting around and being patient as we, of course, witnessed that just moments ago, that meeting, of course, first meeting between the two principal there at Japan Foresight. That takes us really into markets right now, about 19 minutes to the opening bell. Here in Hong Kong and up in mainland China, and we are, uninspired when you look at the market action right now. So Taiwan is coming online, not a lot there. Korea is obviously going the opposite way of just a massive move up yesterday. It's worth pointing that out. Nikkei, if anything, coming off lows of the session. S&P, of course, topping, 7,000. That seems to be just right around the corner, if you think about it. Right. Very quickly, dollar is softer. Last we checked, second day in a row, and of course, we're entering this window of a flurry of central bank decisions. Speaking of just geopolitics and trade there, it looks like we'll get an extension to the one on the Mexican front. That's according to the president there. More on that in a moment. Of course, we look at gold, did dip some of the contracts, not this one specifically, dip middle the 4,000 level. And I think when you look at copper specifically, we're not really seeing a lot there. Speaking of Jiangxi Copper is one of the companies reporting earnings today. Speaking of earnings and speaking of Chinese markets, we are slightly higher in futures coming up on your screens. And of course, the other big story we'll get to in a moment is the resumption of bond buying. And as you can see, yields are pushing lower ever so slightly. Across the curve, the 10 and 30-year yield at 216 on the 30-year yield. That should be at about 1 month lows as far as that's concerned. Okay, that takes us well naturally into the agenda for today. So 4,000 is the level to watch in the Shanghai Comp. I think we closed just 4 points below that level yesterday. We talked about the CGB rally and, of course, what we're looking at as far as the copper and some of the metal space is concerned. This rout in Xiaomi, I think we were down 26% now from the peak. Not just one, not just two, not just three. I think we have 4 trading debuts today here in Hong Kong. The busiest day for first day cash calls here in Hong Kong going back to July. And in about 30 minutes from now, of course, is a weekly briefing coming out of the chief executive here in Hong Kong, John Lee. Okay, let's talk about this bond buying story. You have state media reporting that the PBOC will be resuming or restarting its sovereign bond purchases. Analysts say this may actually be aimed at supporting the debt market and maybe boost liquidity. Let's bring in Min Min Lau, our China correspondent, here with us on set. And the bond market has, in fact, already moved along these lines already.
Yes, and this is partly because, we have seen not a lot of people being very interested in the bond market of late, right? Yeah. It's like a lot of rotation from the bond market into the stock market, and that's the opposite problem that we had back in January when PBOC had halted bond buying. That was because people were piling into the bond market at the time, and we're seeing record low yields. Now, of course, it's a different story now, and the PBOC is saying that it's going to resume bond trading. And you think about it, the concern could be that if the 10-year yield is too high, and that's often an anchor for lending rates and mortgage rates, then that could slow down the economy, right? So the PBOC, I guess, is trying to strike this balance between the rally in the stock market and a healthy growth in the bond market. And analysts are saying that this could compress the spread between the short and long-term yields, and hopefully encourage more people to enter the bond market.
Hey, Min Min, China obviously trying to lure more long-term funds into its capital markets. How's it planning to do that?
Yes, so the CSRC, the market regulator, has announced a 2-year plan to do that. And among some of the measures include, for example, simplifying the licensing and registration process and opening up new products for foreign institutions to start trading. And that include ETF options, commodity futures, for example. They're also trying to increase policy transparency, ensure equal rules when it comes to short-term trading, and also a green channel for certain types of funds, including pension funds, sovereign wealth funds and charity funds, improve efficiencies of fund transfers, for example. But the point is the government is now trying to attract more foreign investments at a time when China's inbound FDI so far this year, up to September, has been down by about 10% on year in yuan terms. And obviously we're seeing this coordinated effort now. They're trying to stabilize the bond market, trying to attract more funds into the capital markets. And this in the context of the US-China trade war, where the US has been restricting Chinese investments. We know China, on the other hand, has been repeating this idea that they are still very determined to open up their markets to the rest of the world.
All right, Bloomberg's China correspondent Min Min Lo, thanks so much. All right, still ahead here on the China Show, we're talking markets with State Street. Find out why they think the Fed's cutting cycle might end earlier and at a higher rate than many investors expect. And we are counting down to the open of trade in Shanghai, Shenzhen, and Hong Kong. As you can see, Dave, what's on your mind?
Yeah. Well, I have a lot in mind. We don't want to get too much into my brain, but I just want to mention here about 14 minutes of the opening, but we're just getting the fix of the day, and it's another strong midpoint coming out of the PBOC, another 708 for a second day, 708.56 against the US dollar. On your screens coming up is the renminbi, and as you can see, we're inching ever closer to the 710 handle on the offshore rate. Plenty more ahead. This is the China Show. All right, so we are barely into Tuesday, and what's really going to be, and this is just scratching the surface of this really massive consequential week for markets. So this is the macro overlay. What you don't have here is the geopolitical overlay, where you have a meeting taking place, of course, on Thursday, President Trump and President Xi. And on top of all of that, you have 5 of the Mag 7, I believe, reporting Wednesday into Thursday. So pick your poison, if you will, across these markets. But you know what? All that being said, S&P 500 futures are now trading above 6,900. 7,000 seems like a good week or two away. What do we make of all of this? Marvin Lo is here with us on set, senior global macro strategist at State Street Markets. He's in town, paying us a visit. Nice to see you, sir.
Nice to be here. Thank you.
Does this make sense to you? Everything that's going on?
Yeah, I mean, to a certain extent, there's still strength in the economy.
Okay.
I would say that the American consumer continues to surprise to the upside, despite everything that's being thrown at them. And if they're spending and companies are making more money than people expect, you're going to engage in risk. And I think that that's been it's been easier to understand that rather than overcomplicate things. And we have a tendency to overcomplicate things.
We do. Okay, let me try that even further then. So in that scenario, why is the Fed going to cut this week then?
Well, so that's a great story. And ultimately, I think that it does have more longer-term ramifications.
Okay.
To a certain degree, the Fed is trying to appease the government to a certain degree. We know that the administration would like lower yields. They are independent, but when everything aligns for them in terms of inflation not necessarily surging anymore, and concerns about the job market, they want to get a little bit ahead of that. Investors want them to get a lot ahead of that, and I think that's kind of the bid and offer, if you will, in our world.
So they're cutting tomorrow. That's likely a done deal.
They are.
There's December, so two are priced this year. I think you have 2 or 3 more next year to 2027. How does that curve look to you? That's about 5 cuts. Does it make sense to you?
Yeah, it looks a little aggressive.
It does. Okay.
December's a little bit of a crapshoot, if you will, just because we don't know where the data is. If we do get data and we're comfortable with the releases and it shows that there's a bit more strength in the economy that I think exists, they should take a little bit of a pause. And then when we kind of look at how the individual members viewed all of this in September when they gave us a dot plot and all those other things, it was pretty much split. Outside of one more extreme vote, a little bit more than half, one more than half thought that they should do 2. The other groups thought that they should do 1. And, that's pretty much what we're debating right now, whether it's 1 or 2 more before the end of the year.
Okay. The story on the dollar going into next year, I think we're down 10% on DXY, 7% year to date, I think, on Bloomberg Dollar Index. Surely that can't continue at this rate for many years, or what's the call going into next year?
So for sure, if we're looking at things from kind of a short to intermediate term trading type perspective, it is an extended loss at this point. We've got data in terms of customer positioning. Customer positioning, if you kind of look at things over a 5-year period, are quite low. You get a dollar lower and yields higher, I think, because I think they're somewhat related. If you are really worried about the U.S. in kind of a more structural manner, like, do I need to own as much dollars kind of going forward that I have versus the last 10 years when I owned a lot? So I think that's where we're debating right now. For the moment, I think correlations around yields and around the dollar are starting to make sense. So I do expect some strength maybe going into the end of the year, but we're going to have a lot more clarity into 2025 with the Fed, with all of this tariff discussions, with inflation, to really build much more gains in the dollar.
Will the tariff-induced inflation that has been in the pipeline for some time, is it ever going to show up?
You know what? That's a great question. Investors, for the most part at this point, are saying no. We kind of see how inflation swap pricing is. We see, really the rally, if you will, in U.S. duration after an extended period of time of underperforming. Our view of the world is that it is going to make its way in, and the fourth quarter would say it again.
Yeah, well, we're here.
We're here, exactly.
Okay.
Exactly.
Do we see a first quarter now?
As we go into the end of the year, some of the information that we have shows that retailers are finally starting to pass that on. So all the stuff that they bought before and they were able to put on the shelves without the higher price, that seems to be making its way out of the system. But even more important, based on some of the stuff that we've been looking at, is that they're increasing prices on non-tariff goods. In other words, there's pricing pressure. They're trying to possibly offset some of the tariff price hikes that they need to make their way into the prices. But overall, that means inflation does rise, notably kind of going into the end of this year into the beginning of this year.
Interesting, because you just reminded me by one of your answers there that you guys see a lot of these flows. Very unique perspective there. Do you think EM still catches a bid moving forward? What are you seeing as far as positioning and flows there?
Yeah, so our data around the yen is that everyone's pretty neutral. They had tried to be long it, they had tried to be short it. Both of those instances have created volatility, and things didn't necessarily evolve the way everyone expected. We would view that as clean positioning. So from a clean positioning perspective, if we could finally get a little bit of comfort that directionally they're going to, if you will, tighten policy. That's what everyone's waiting for.
Right.
Rate hikes, and I think that would actually benefit their bond market and their currency markets at the same time. Then I think there's scope for some yen appreciation. But investors do seem to be a bit on the sidelines, waiting for maybe a little bit more clarity. And with the new government coming in, they've got to find their footing. It might take a little while.
What about gold? How are you looking at that?
Yeah, you know what? Gold is, there are in my mind two trades to gold.
Sure.
One is around dollar debasement. So the strength in gold is saying something about the weaker dollar and a lot of the other things that we talked about. It does feel frothy to me. So from a trading perspective, it looks like we're getting overextended. When I see lines in social media picking up people buying gold coins, that might be a sign that we're a little bit extended. But there is some longer-term questions that one has to ask. And generally speaking, gold doesn't make up a big part of people's portfolios. So from a kind of fiat currency hedge, in my mind, it does make sense to own it. Pick your levels importantly, but there is something to this dollar debasement story.
Fantastic. Marvin, it was great to see you. Let's do this again next time you're in town. I think your team's going to let us know, of course. Marvin Lowe there, guys, Senior Global Macro Strategist at State Street Markets. Just very quickly before we go into the opening bell, a couple of minutes away, so we have a lot of trading debuts today. Sandy Heavy unchanged. It might be the first time we're actually seeing a massive one coming to market with, just to borrow Marvin's point there, somewhat neutral on pricing. Same can't be said about the others. The opening bell is coming up next. You're watching The China Show. Good morning.
And welcome back. You are, of course, watching The China Show. We are counting down to the open of markets in mainland China and Hong Kong. And again, we'll see what kind of bump, or if any bump, we're getting from the positive sentiment coming from Malaysia and that framework deal between China and the United States. And again, all the flattery being tossed around between Trump and Takaichi-san in Japan. Curiously, Dave, with 20 seconds to go before the open here, you're seeing Sandy Heavy, the big debutante. It's the 7th Chinese company to list in Hong Kong this year, over $1 billion valuation, $1.6 billion they're raising, and it's flat as can be, flat as a pancake in the gray market. So we're 5 seconds away from seeing the numbers start turning.
Yeah, it was bound to happen. We would get a flat first day of trading, just really looking at how manic and to the upside most have actually been. Just to the point Steve was just making there, so today's actually the busiest listing day here in Hong Kong going back to July. So you have a few companies coming here. In fact, just a few hours ago, speaking of, mark your calendars, now November 6th is coming up, and we have a few more companies listing on those dates. I think I'm counting WeRide, Pony AI. My producers are about to help me by showing a graphic on the screens. There we go. Thank you so much. Joyce and Electronic also on November 6th. But looking at price action, almost the equivalent of a really good general anesthetic to put you to sleep, really, in some ways. Not just this, when you look at the rest of the Asia Pacific. We'll talk about the Philippine Peso in a moment, because that one hitting a record low, that could be an idiosyncratic story. Let's have a look at where we are as far as the CGB curve is concerned. This time we're looking at futures. Should be up. Last we checked. And really indicative of this resumption of bond buying operations. Not so much that this was a complete surprise. People had been talking about this in recent months. We did get that report, though, coming through out of state media yesterday, that it was coming and that they were going to resume bond buying operations. And sort of the equity market overlay here is this could provide even more liquidity, if you think about it, to this liquidity-driven equity market rally. Although if you think about it too, bonds have been a tremendous source of funding as it pertains to this rotation into equity markets. Gold, very quickly, should see some pressure there. That's what we did see across some of the other parts of the Asia Pacific, some of the miners, some of the ETFs on your screens. Speaking of debuts, I won't go through each of these ones, but suffice to say we've seen better days on these trading debuts. We have Sani coming up on your screens, and we have, I think, 2 or 3 more that are listing. Oh, there we go. So one is flat, the other maybe not too flat. And earnings, HSBC, Ping An, Bank of China, among others that are set to report later today. HSBC, of course, that's around midday, so we're up 2% as far as that's concerned. So speaking of, and that's just to say that we're in the thick of earnings season, and you have CICC expecting these onshore-listed firms to report the fastest growth in profits since 2021. Traders, though, they've spoken to that they remain fixed on the geopolitical side of the conversation here. Let's bring in our Asia Equities reporter, Winnie Xu, here on set to talk us through what we are expecting from 3Q here as pertains to Chinese earnings.
Yeah, actually, you just saw on the screen that we are expecting 5.8% of third quarter earnings growth compared to last quarter right here on the screen. And that is the biggest jump since 2021. And compared to last quarter, just 1.6% up. So actually, we were quite surprised at how good good things could be looking for third quarter. And unfortunately, somewhat that doesn't seem to be attracting investors' interest as much right now, because a lot of focus right now is more on these trade tensions and how it's going to play out. And another issue with that is also because the recovery seems a little uneven at this point. You have on one side the AI theme, anti-involution, gold, these topics really catching investors' attention. And we're expecting really strong earnings around that front, as well as the finance earnings that we will be expecting very soon today and also this week. But on the other hand, things that are more tied to consumption or domestic demand seems to be on the weaker side of things. So that uneven the recovery seems to also indicate that the broader market might not be receiving as much of a big boost from these third quarter expectations.
You might have noticed, first news set, very nice, right? The other one is Yvonne usually should be here. She's not here because she's en route to Korea for this big meeting that's coming up, of course, with the two presidents. How are people positioned ahead of the meeting between President Trump and President Xi?
Yeah, that's, I think, a very interesting but also very tricky one, because things are quite divided, you know. On one hand, you have like these sell-side analysts from Bank of America and also from Goldman Sachs saying that it's a good timing to buy the dip and that you should stay risk on until the end of the month, which is coming up very soon in just a few days. And that Goldman Sachs was also saying that the default mindset is really to buy the dip and to position in for all these structural factors. So they are more on the bullish camp. But then on the other side of things, you have Nomura and Morgan Stanley really recommending to still stay off from any potential dips, saying that there is still quite some uncertainty when it comes to what can come in this conversation. Yes, yesterday or over the weekend, we had that framework. So it seems to be setting a positive tone, but things can still change drastically as you see. So until we see what's going to happen on Thursday, I think there's still a lot of uncertainty in terms of positioning as well.
All right, Bloomberg Asia equities reporter Winnie Xu, thanks for joining us. We're here in Tokyo right now, of course, waiting for Presidents Trump and Prime Minister Takaichi to reemerge. They're expecting a signing ceremony, expected possibly in shipbuilding momentarily. President Trump has hailed the U.S. alliance with Japan and praised the new Prime Minister Takaichi as they begin their first face-to-face meeting in Tokyo.
We've received your orders for a very large amount of new military equipment, and you know that we make the best military equipment in the world, the jets, the missiles, and everything else, and hopefully we don't have to use them very much, if at all. But we appreciate that order, and we very much appreciate the trade. We're going to do tremendous trade together.
And our economy and government reporter Erica Yokoyama joins us now. So obviously we've been following the movements of Donald Trump as he came up from Kuala Lumpur to Tokyo last night. Tell us what's on his schedule. In addition to Takaichi-san, he's going to be meeting other people. What can we expect from these talks?
Sure. So as you just said, Trump arrived yesterday from Malaysia as a part of his Asia trip. And today is going to be the core day, a very busy schedule ahead for him. So he just had opening remarks, signing a ceremony with Takaichi, and now he's going to have a working lunch with her. Then he heads to Yokosuka Naval Base. And tonight, he will meet a bunch of Japanese business leaders. And in the next 2 days, a few key outcomes are expected. They may confirm progress on Japan's $550 billion investment in the U.S. Japan may also announce plans to boost defense spending, something that Trump has been requesting for a long time. And in addition, the two sides are expected to discuss cooperation in shipbuilding, probably signing an MOU, as you said, or critical mineral supply chains.
Well, that $550 billion investment pledge into the United States, it was not negotiated by Takaichi-san. It was Prime Minister Ishiba before he stepped down. There's been commentary or debate whether she would reopen it. Most likely she will not try and renegotiate it. But do we really know more about the ins and outs of what Japan is going to invest in the United States? You mentioned the shipbuilding agreement. That is possibly the one they're about to sign momentarily.
Sure. Actually, like we are increasingly hearing that there's some tangible progress on that investment scheme. Several Japanese firms, including like AI, semiconductors, and other key areas, are pitching the project actually right now. And the U.S.-Japan Investment Committee may soon begin reviewing those pitches in terms of like feasibility, profitability, as well as how to finance them as well. And among these sectors, actually, the energy powers are drawing this particular attention after Commerce Secretary Lutnick yesterday highlighted the importance of power infrastructures in local media interview. In that interview, he actually said that the first project could be possible to be implemented by the end of this year. Although no concrete plans are expected to be announced during Trump's visit this time, but Japan probably wants to signal that some project will come sooner than later. And Trump's, as I said, will meet quite a bunch of Japanese business leaders tonight at the dinner. So maybe like Japanese companies will show their appetite and interest to kick off the negotiation with Trump.
Yeah, and also maybe appetite for the dinner itself. Erica, thank you so much. Erica Yokoyama there in Tokyo, our Bloomberg Economy and Government reporter there. As we were just having a conversation, so just two things to know. I'll make this very quick. Philippine Peso hitting a record low a few minutes ago against the U.S. dollar. We're now trading at 59. The quote is 59.15.3 on dollar peso. Point number one. Point number two is when you look at gold, this is completely separate from the peso story, is we're just getting a news line coming through. The BOK is considering its first gold purchase in about 12 years or so. So more on those stories in a moment. You're watching The China Show. Welcome back. You're watching The China Show. 12 minutes into the cash market session. Some pressure coming through. Not completely out of line with the declines we're seeing overall, but yes, we are looking at some pressure across some rare earth names. You have these export curbs on these critical minerals have prompted the West, especially the United States, to launch more meaningful efforts to build a supply chain that is independent, agnostic, if you think about it, to what's going on in China. Martin Ritchie's with us right now, our metals and mining reporter. They've been looking closely at this, and Martin's with us out of mainland China today. So Martin, talk to us about, I mean, you can't do this overnight, certainly, but what are the efforts that the West is making to, I guess, reduce its dependence on China for this?
Yeah, I'll talk very specifically about magnets. This is the main use of rare earths, rare earth permanent magnets that go into all sorts of applications, from common household goods to cars and military applications, fighter jets. And these were at the centre of the trade tensions we've seen between US and China this year. Now I've been talking to a whole array of executives in the rare earths industry, from miners to magnet plants, to talk about their plans going forward, because governments, as you said, are now keenly focused on trying to build up these supply chains. In the US, it's interesting that there are already a sort of initial wave of magnet plants coming on stream now and in the next few years that were already sort of in the pipeline even before the trade turmoil this year. But the challenge for them in sort of getting up to speed and to make those announcements turn into kind of reality is just to build the whole prior supply chain, from the mines, it could be anywhere in the world, to the separation plants, the processing, the making the metal, and then all the latter stages that go to making the magnets. So it's quite a complex process. You can get all the capacity on paper you want, but it's sort of turning that into real material that really offsets what China can produce. That's the challenge going forward.
Martin, I'm just going to interrupt you just briefly. We'll get back into talking about rare earths in just a second. We're seeing footage right now, if we do have those live pictures of Trump and Takaichi-san in Japan signing an agreement. It's widely expected to be around shipbuilding cooperation. Maybe if I can get in my ear whether that has been confirmed or not. But as you can see, the two of them not yet quite signing it. But Martin, let me get back to you real quickly about this fascinating story that you have. There come the documents on the first agreement that the two leaders are signing right now. If you could just comment a little bit about the time to market for these rare earths. I mean, Novion Magnetics is one company that you mentioned in your story out of, I believe, Austin, Texas. How quickly can they get up to speed, as well as the signing ceremony, if you will, that the United States had with Australia to provide rare earth minerals? They can't replace China's supply overnight.
They're not going to replace it overnight, but there is a sort of the beginnings of a supply chain now coming together. You've got the US government very kind of focused on this now in the way they haven't perhaps been before. The US has invested in a rare earths company that mines in America, MP Materials. It's pumped money into them to help them fund a new magnets plant, so they'll have a sort of mine to magnet supply chain. You mentioned Australia. The US government signed a deal with Australia to get some of its supply of rare earth minerals, but again, those mines there will take some time to develop, get up to speed. And you're talking about deals with other countries, Brazil as well. And I think what they're edging towards is a sort of form of international cooperation where, perhaps there's G7 countries plus some others have a sort of ring-fence supply chain where miners can supply within that, tariff-free, but China might face some trade restrictions going into that. That's the sort of arrangement that seems to be emerging if you look at the discussions between various countries.
All right, Martin Ritchie from Bloomberg coming to us out of China. Thanks so much. Great story. I recommend everybody to pick it up and read it from the Bloomberg terminal. All right, as we were just seeing, President Trump and Japanese Prime Minister Sanae Takaichi, they have just finished signing their first deal on this what's going to be turning into what we hear is a working lunch. It's widely believed that they've been signing this deal on cooperation in shipbuilding, as Donald Trump has not been secret in his desire to make America great again in shipbuilding. Japan and South Korea, of course, out in this part of the world, and China, no doubt, are the biggest shipbuilders here around the world. So we'll have to see the details. Also, of course, Howard Lutnick, the Commerce Secretary, has talked about one of the first signings for the $550 billion investment fund that Japan has pledged to, build out as part of the agreement for a 15% tariff from the United States. The first deal could be in the power generation area into the United States. So we'll have to see if details are forthcoming on that. As you can see, they've just signed it. Subscribers can also turn to the terminal for more on this. We have a top live blog going on. T-Live Go is your function for the latest updates, plus commentary and analysis from our expert editors who are poring over every signature and every word coming out of Akasaka Palace here in Tokyo. More ahead. This is Bloomberg. And welcome back to the China Show. Just a clarification, Donald Trump and Takaichi, the Prime Minister of Japan, just signing that deal. It was, according to the White House, a framework for critical minerals. All right, South Korea's Hanhwa Aerospace says it remains optimistic about opportunities in the U.S. despite China's sanctions on its American subsidiaries. Global Chief Strategy Officer Alex Wong told us exclusively about their plans to diversify supply chains.
We're aware of the sanctions announced by China on Hanhwa's USA subsidiaries, and we're reviewing what that impact will be going forward. But I think the story here is, whether it's from the Chinese perspective, whether it's from the Korean perspective, whether it's from the U.S. perspective, this really highlights the significant role that Hanhwa plays in shipbuilding and the role that we can play in the growing cooperation between Korea and the United States as allies on shipbuilding. We have technological capabilities, advanced manufacturing capabilities, sheer industrial scale, where we really can, as the two leaders, President Lee and President Trump have said, make American shipbuilding great again. And we'll see when President Lee and President Trump meet here in Gyeongju whether there's more shape brought to that Mazga deal. And we stand ready to provide support to that and ready to implement that cooperation.
But Hanhwa has been so ambitious when it comes to the U.S. Navy shipbuilding potential. Does this sort of restrict or give you pause for thought?
Well, I think there's going to be a lot of opportunity in the United States on shipbuilding, whether that's on naval ships, whether that's on maintenance and repair of naval ships. We've done one of those in our Okpo yard in South Korea. But we're also looking at expanding and modernizing the Philadelphia shipyard, the most historic shipyard in the United States, which we acquired last year. As we build out capacity there, with a goal of moving it from 2 ships a year capacity to 20 ships a year if we reach our objective. That provides a lot of opportunity, whether for naval ship repair, maintenance, even construction, or commercial ocean-going shipbuilding.
How is Hanhwa affected by China's restrictions on rare earths, which of course are widely used in the defense industry?
Right. Well, I think every company and every country in the world is looking at the possible implications of those restrictions. As you say, they are an upstream input into a number of industries, not just defense, but it's something, as a defense company that we'll look at, as will every other defense company in the world. But as you know, Sherry, that's going to be a topic of conversation here between President Trump and President Xi when they meet here in Gyeongju, and we'll see what the outcome is of that.
Where does Hanhwa source rare earths from, and is it impacting the way that you think about supply chains?
Well, we think about supply chains from a security perspective as well. What can we do to source, whether it's rare earths, whether it's our steel, whether it's our other technological and commodity inputs, in a way that it makes us resilient, and therefore we can deliver for our customers. I'll give you an example. We are the #1 maker of artillery systems, the #1 howitzer in the world, sold to many countries, and nearly half of those inputs are actually U.S. sourced and then sourced from Korea and other nations. So we're looking to diversify the inputs into all of our products, again, for security reasons.
But China takes up most of the sourcing when it comes to rare earths. Are you diversifying?
Well, I think every country and every company in the world is looking at that. But you're right. China has a very dominant and very strong position in the refining of rare earths. And if you look, whether it's at the United States, whether it's Europe, whether it's APEC economies, how do we all look at that supply chain, strengthen it, and strengthen the resilience of countries and companies around the world? Again, from a national security perspective, but just for the health of the world economy.
There we go. That was Sherry and Alex Wong, Hanhwa Aerospace Global Chief Strategy Officer, with that exclusive conversation. We'll just leave you with a look at Shanghai about 25 minutes into the cash market session. There's plenty more on the way. The second hour of the China Show is just ahead. Welcome back. You're watching The China Show. We're just going into the second hour of the program. Left side is what So I'm a bit confused, actually. So it was a bit chilly last week. The mercury stepped up a notch or two over the weekend, came back down on Monday, and it just seems terrible on Tuesday. A bit of rain, some humidity's back, there's not a lot of visibility. And you know what? Volumes are also on the thinner side as far as markets go. On top of price falling right now, 0.25% to the downside. All that said, there's lots to look forward to. HSBC is coming out with earnings today, so we'll see what that holds in about 2 hours or so. That's just to say it's a busy earnings day in Hong Kong. It's a busy listing day as far as some of the big debuts are concerned. More on that in a moment. Shanghai comp did get close to 4,000. 4 points short of that sort of nice round number. We've stepped back about 6 points from that close yesterday. We talked about trading volumes on the Hang Seng. We're, on an aggregate basis across the region, we're about 21% thinner than where we should be on a 30-day average for this time of the day. Just very quickly, HSBC, Zijin Mining, that's on the back of the gold price moving lower. Although on the gold price, the Bank of Korea said it was mulling. Or we understand that the report suggests that Korea was looking at its first gold purchase since 2013. Flip the page, please. CGBs, the other thing as well is coming out of state media yesterday was the resumption of bond buying. Yields are pushing lower across the curve in mainland China. One market coming online today, the reason we're looking at this today is that massive move down in Jakarta yesterday. We're continuing to see pressure there. Staying in Southeast Asia, Philippine Peso record low, rally across the steel space. These are rebar futures in mainland China. And of course, gold also catching a bit following the dip below that 4,000 handle. Okay, let's bring in Mark Cranfield out of Singapore for us to help us understand this, the mood music across markets today. And Mark, what's the DJ playing today? What's this mood music like?
Yeah, it's really cruising music today. We're on the West Coast Highway. Things are going fine. We've got the roof down, cool wind in our hair. Everything feels great. Only problem is we've got this Trump-Xi meeting coming up in a couple of days' time, and we could go straight into a big storm or something like that. I think it almost feels as though people are just clicking their heels at the moment, just waiting. Can they get past Thursday without any disruptions to this, almost like a Goldilocks scenario that we currently have in global markets? The bond markets are very tame. Treasuries are nicely priced for lower interest rates from the Federal Reserve. Currency markets are not doing very much. They're pretty steady. There's no real disruption from commodities in the sense that oil prices are relatively stable and low. Got a bit of a pullback in gold, which is probably helping the equity market to a degree. So now it really all hinges on getting through this meeting between the two presidents later in the week without them falling into disarray. They just need to have an amicable meeting, sign a few documents, and off we go, and we get the year-end rally that everybody's been hoping for. We can look forward to NVIDIA posting yet another earnings beat, and it's a great finish to the year.
Hey, Mark, I'm not so sure we're going to get the kind of flattery like a Michael Bolton song between Trump and Xi, but like what we're getting at Akasaka Palace right now between Takaichi-san and Trump. How am I supposed to live without you seems to be the prevailing theme. And there's a honeymoon period in the markets, and Takaichi-san just a week into her premiership, 50,000 plus for the Nikkei. How long does this honeymoon period last?
There's definitely a risk of complacency building up in Japanese equities because, as you say, they're giving her a honeymoon start. And there's almost an assumption from the way that markets are pricing is that she's going to get everything she wants. Every time she brings a spending bill to the Japanese parliament, it's just going to be rubber stamped and off you go. And yet when you look at, she doesn't even have a real majority. Everything is very thin. So every single item that she brings for a vote is going to be pretty close run thing. She's going to need to rally support every time. There's no guarantee that everything that Takaichi wants is going to go through smoothly. And yet the markets are pricing for a very benign scenario. They're also assuming that the Japanese yen stays weak for a very long time. That may not be the case. We've got a Bank of Japan meeting coming up this week. Nobody expects them to change interest rates this time. But we may get more dissenters than we had at the September meeting. We had two people looking for an immediate rate hike. Then, if you look at the skew between hawks and doves currently on the BOJ team, there's actually a build-up of relative hawks. We could easily get 3 or more dissenters wanting a rate hike right now, and that will probably boost the yen. So that could disrupt Japanese equity markets as well. Plus, we've got earnings season coming up in November. There's a pretty high bar for everyone to beat on that front. So there's definitely a little bit of risk here that Japanese equities have run too far ahead, and the first time we get any pushback on what Takaichi wants, that could be reflected in the stock market.
Gents, fantastic references there. Steve, Michael Bolton, of course, who can forget? He also sang, what was that other song? I said I love you, but I lied. Mark Cranfield, cruising for us in a Lion City in Singapore. Speaking of cruising, the fixing coming through out of the PBOC. On top of that, the fix 708 handle and the onshore rates strengthening to the strongest level against the US dollar going back to around this time last year, so November 2024. On those levels, coming up on your screens is dollar onshore 710.14 against, is the exchange rate. Right, coming up here, we're looking at the wealth effects, question mark. Exclamation points. Bloomberg Intelligence says Hong Kong may soon top Switzerland as the world's leading cross-border wealth center. Goldman Sachs joins us next for a deeper dive into private wealth management trends in the Asia Pacific. Much more ahead. This is Bloomberg. Right, welcome back. You're watching the China Show. Yeah, so quite a big number by that date or by that year. So Bloomberg Intelligence thinks that private wealth assets here in Hong Kong, that's AUM, could nearly double to that amount by that time. That puts, of course, the financial hub on track to top Switzerland as the world's leading cross-border wealth center. Charlie Wong, our senior analyst at Bloomberg Intelligence, is here to just help us understand the road from here to how we get there and what's going to drive us to that number.
Thanks, David. So we're seeing very robust inflows, and that's a trend that has continued since last year. It's driven by cross-border. There's also a very strong household wealth growth in Hong Kong. And then also investment returns are a lot better. So last year, when we look at the SFC numbers, AUM was actually up 15%, whereas we only had around 8% growth. So I think just a long-term trend, we are very positive. One thing that I think is really going to drive this is the pickup in risk appetite. So we actually did a survey of 100 respondents in Hong Kong and Singapore, and it found that risk appetite is going to rise over the next 12 months. And we're definitely seeing that, in terms of the asset allocation preferences in equities, private equity, hedge funds, digital assets. Those were the most popular. Also, Greater China is now back in favor. So it was ranked as a top region in terms of investment allocation.
Shani, this is Steve Engel up here in Tokyo. I just want to ask in particular about the Chinese investors. Clearly, the risk appetite is not high on the mainland because of the uncertainty towards the economy, and people are kind of holding on to their funds. But how exponentially have you seen the wealthy in China come to places like Hong Kong as opposed to Singapore or elsewhere for their wealth management?
So Hong Kong is definitely the top destination. I don't think there is really that competition, right? Like I could go on all day about why that is. We've got the geographical location, the proximity, and also all the cross-border infrastructure. So I think the outlook is very positive because right now we are seeing Beijing really push ahead with opening up cross-border access, with potentially enhancements to be made to say the Wealth Management Connect or even other programs like the MRF program or potentially higher QD quotas. So overall, we're very positive on the outlook for cross-border wealth coming in from mainland China.
Well, speaking of southbound flows, are they sustainable? What are you hearing?
So it's been very strong.
Very strong.
stock connect at a record high, right, in terms of turnover. But actually, I think the party has just started. Because when we look at just the amount of money in China, the amount that is locked up in deposits, it's over 60% of household financial assets. This is even more than Japan, which is at around 50. So there's a ton of deposits that are yet to be deployed in capital market products. And then on top of that, they're so underinvested overseas, because of capital controls. But now that they're opening up, I think there is a huge potential. So just FPI, which is foreign portfolio investments, that's the amount of investments that they invest overseas, is only 8% of their GDP. Last year was 6%. But when we look at other countries like UK, Japan, it's over 100%. So that just goes to show there's just so much potential for offshore investments.
Sharni, also in your survey, AI played a significant part of that. How do you see that shaping, obviously, wealth management, and how does that relate to the jobs that are necessary for wealth management?
Yeah, so no surprises. From our survey, tech was the biggest cost driver, say on AI, big data. But what was a surprise was that despite the fact that everyone's spending a lot on AI, only 3% anticipate layoffs. So this just goes to show that, advisors, they're in huge demand, and we think that AI is more of a complementary tool rather than a replacement for human capital.
Sharni, fantastic. Thank you so much. For Bloomberg clients, you can check out her research, of course, and her teams at BIGO. Sharni Wong, there, our senior analyst at Bloomberg Intelligence. Let's use that as a jumping off point to broaden the conversations around trends in private wealth and really just asset allocation, generally speaking. Joining us here on set is Sara Naison-Tarajano, Global Head of Private Wealth Management, Capital Markets at Goldman Sachs. She's paid us a visit as she goes through the Asia Pacific. It's very nice to see you.
It's great to be here. Thanks so much for having me.
It's almost an annual habit to see you.
Exactly.
So what's changed since the last time you were here, give or take? Let's call it this time last year.
Sure. So last time we spoke about some of the trends we were seeing with our global family offices. And today we actually are speaking on the back of a global family office report that we put together that surveyed 245 family offices from around the world. And we have some really interesting data on the back of that. What I would say is that family offices are generally risk on. And that was the case a year ago, 2 years ago. So we see our global family offices 73% in risk assets. What that means is that these are families that sort of understand that in order to continue to grow their capital, to beat inflation, post-spending, and taxes, you have to be invested. So that's been really a prevailing theme. But to complement that, we do see high cash balances, so 12% in cash, that more barbelled approach to manage the illiquidity of their portfolios.
Okay.
I can also spend a minute on some of the differences we see with our APAC family offices. Sure. So I would say also generally risk on, so 66% in risk assets, a combination of equity and alternatives. But one interesting trend, we see very similar allocations to public equities. But one trend that we saw from 2 years ago in our survey is that our Asia family offices have actually increased their allocations to public equities by 7%. They've actually decreased their cash balances from 25 to 19, but they still have higher cash balances than our family offices in EMEA and the United States.
Okay, interesting. Okay, so let's talk about the increase to public equity, because that's interesting. What's the overweight there?
Sure. So they're about. So our APAC family offices have 30% in public equities from 23% 2 years ago. And I think all you have to do is look at the equity markets to sort of understand that.
They're doing well.
They're doing quite well. I looked back. If you look at the last 2 years, the U.S. equity market has returned north of 70%, all on local currency basis. I'm sharing all of this. The Chinese market has returned 65% and Japan 69%. And so I think these are quite sophisticated families, and I will say we saw this in April around Liberation Day. When these markets get dislocated, these families take their cash and they go into equities, and that is a real difference than what we see from the classic institutional community. We had very little hedging in April, very little profit taking. When we saw the market dislocations, these families went running into the market, and I think that's one of the distinct advantages that family offices have. They can run into the market when everyone else is running away. They're not answering to a board of directors. They're more long-term. They're often multi-generational. And they know when you get these pullbacks, you want to be risk on.
Right. Yeah, Sarah, I was just going to ask you more about this. Hi, it's Steve Engel up here in Tokyo. I'm sort of following the geopolitical trends up here as Trump is moving around North Asia, and he'll be going over to Korea, obviously. There's a lot of concern about, obviously, bifurcation of supply chains and the world order, if you will. And you talked about them being risk on. I find it fascinating that they're running into the equity markets when a lot of people are kind of pulling back with that risk off sentiment and going into gold and safer investments, but you're seeing the opposite.
Well, I would say, first of all, this is, progress over the last 2 years. So this is what we've seen in the last 2 years from our last survey, and we saw a lot of people entering the market in April. I would say if you look at today, certainly people, given the market appreciation that we've seen, are maybe a little bit more cautious, and they're talking a bit about hedging trades, whether that's buying puts or taking advantage of skew and buying put spreads, or with some single names that have gone up significantly, look at collaring stocks, so buying a put and selling a call. But I think the fact that they have these large allocations to cash means that they worry a little bit less about the overall portfolio construction because they're not worried about being forced sellers on dislocations. And then remember that for our U.S. investors, which comprise close to 50% of the survey, there's big tax issues when you sell large concentrated positions or any positions that have deep embedded gains. So we haven't really seen that much concern around their equity allocations. We have seen a lot of entrance into gold. And I would say, the pullback that we've seen in the last week that we really think was a momentum shift and profit taking represents an opportunity for some clients who missed the boat on gold to get involved.
Yeah, I was actually going to ask you, so we put that on a graphic, actually, sort of the changes in allocation from, I think, 2 years ago to the one in 2025. Are you observing, or are you noticing any new profiles of investors getting into gold? In other words, what's the new community that's getting into this as well? Yeah,
so I would say, look, we don't have gold at Goldman Sachs in our investment strategy group. We don't have gold as part of our asset allocation. We view it as a more tactical trade. I will say that many more clients...
Are you getting pushback on that? Just to ask you, from clients.
No, I think that clients look at it more tactically. Okay. They don't necessarily view it as a core part of the asset allocation. That doesn't mean we don't think it's, we have quite a bullish, so we think we're going to be at 4,900 an ounce by the end of 26, right? So that leaves quite a bit of room for upside. So we see clients trading it more tactically. I would say most of our clients are interested in talking about gold. What we saw from the survey is that the clients that used gold the most when they were thinking about a hedge were clients in APAC. But I think that is expanding, and I just came off a trip to the Middle East. We did a family office conference in Dubai. There was a lot of discussion around gold. I think, geopolitical risks, tariffs, all of these things lead clients to think, maybe I should have something in gold. And then you add to that sort of how underweight gold EM central banks are versus their G7 counterparts. We put out an interesting piece that said if you took 1% of the privately held assets that sit in U.S. Treasuries and move that into gold, that would imply a 5,000 per ounce share price on gold. And so I think there's a lot of discussion around gold for sure.
Yeah, that's quite a small amount too, like just only 1%.
Yeah, no, we're not talking major moves here. Yeah. And I think what's interesting, and your colleague mentioned this, is just because people are looking at hedging trades or thinking about gold as a hedge doesn't mean they're steering away from their asset allocation. Right. I think they think a bit more as an overlay and a complement to actually having to make big seismic shifts in their asset allocation.
Can I just ask you one last question?
Sure.
Private credit, how has that changed? Particularly, recently we've had some negative news, in some parts of these deals. Has that affected any of the appetite for it?
Yeah, I think, look, what I would say about some of that news, I do think it's idiosyncratic and isolated, and I think the earnings that you see from the large banks sort of demonstrate that, generally not affected by that. But our clients in the survey actually increased their allocations to private credit quite significantly. Still small, so from 3% to 4%, but that's a 33% increase. And I think the interest in private credit is still the pickup pickup you get over public market fixed income. Okay. When we look at it, we see about a 3% pickup. And then, the better governance being higher on the cap stack. I think the key with private credit, and we talk about this a lot with clients, is you have to be super disciplined about who you partner with. You need to focus on a manager that's been through multiple cycles. You need to understand what their loss ratios look like, what their defaults look like. Have they been through, the global financial crisis? How long have they been doing this? But I do think that most of our clients who are very overweight equity products, sort of like private credit, as a way to think about general diversification in their portfolio with a higher yield associated with it, clearly, than equities.
There we go. Sarah, thank you so much for paying us a visit.
Thanks so much for having me. I love being here.
Enjoy Tokyo, I believe.
Thank you. Yes, tomorrow.
Yeah, there we go. Sara Naison-Tarajano, their global head of private wealth management at capital markets at Goldman Sachs. Right. Steve, so Sarah's headed your way. Very quickly, before we head to the break here, Shanghai Composite has topped 4,000 for the first time in 10 years. We're trading at, okay, there we go. The news gods have reigned and then taken it away. We're back below that 4,000, but we were above that. You don't have to take my word for it. Look at the screens. There we go. Plenty more ahead. This is The China Show.
Welcome back. You're watching The China Show. Here are some headlines we are tracking from around the world. Canadian Prime Minister Mark Carney plans to meet with Chinese President Xi Jinping later this week in South Korea. Of course, that's where the APEC summit's going to be held. Canada is looking to firm up relations with China while longstanding ties with the United States fray. President Trump recently called off trade talks and threatened additional tariffs over a TV advertisement quoting Ronald Reagan on free trade. And Mexican President Claudia Sheinbaum says the U.S. is extending a deadline to reach a trade deal by several weeks. Sheinbaum says both she and President Trump agreed to extend talks to give both nations more time to reach an agreement on non-tariff trade barriers. Trump earlier set a November 1st deadline to raise tariffs on certain Mexican goods from 25% to 30%. And the European Union and China will hold talks this week to address trade disputes. That's as Beijing's restrictions on exports of key minerals and chips risk disrupting Europe's auto industry. The EU is working on a contingency plan while also preparing trade options to retaliate against China's restrictions.
Okay, we're just looking at Japanese cash markets going into the lunch break about under 4 minutes from now. So we're lower on the benchmark. And this is the big news, the big stock news at least here. So you have NIDEC. Volumes are just through the roof. I think we're more than 12x what you're usually seeing. So the Nikkei's actually removed the stock here amid improper accounting issues. The stock is acting accordingly. In place of that is dividend, of course, which is coming through 15% to the upside, following, of course, that's the news there as far as that company is concerned. The inclusion following the exclusion of the other. Okay, we're just headed into the Tokyo lunch break, and on the other side of it, we'll talk more about really what took place there this morning, why Steve's in town, of course, and all the coverage we're doing out of President Trump's trip to Tokyo. Plenty more ahead. This is The China Show.
Now, both Japan and the United States have developed the greatest alliance in the world. And together with you, Japan is ready to contribute to the world's peace and stability.
This will be a relationship that will be stronger than ever before, and I look forward to working with you. And on behalf of our country, I want to just let you know, anytime you have any question, any doubt, anything you want, any favors you need, anything I can do to help Japan, we will be there. We are an ally at the strongest level.
now President Trump there, and also Japanese Prime Minister Sanae Takaichi speaking earlier at Akasaka Palace. And an interesting dynamic, Dave, going on there. And we're hearing just on the Top Live blog that Takaichi-san has presented Donald Trump with a golf bag signed by Hideki Matsuyama. And also Prime Minister Abe's putter apparently is in that golf bag. Of course, we all know that Donald Trump and Shinzo Abe had a good relationship. The last time Trump was here in Tokyo, he met with Abe at Akasaka Palace. We know that Takaichi-san is a protege, if you will, of Shinzo Abe. So there were a lot of kind words about the slain former Prime Minister of Japan, who was, of course, assassinated in 2022. Dave?
Yeah, they did. That was one of the things that stood out to me, Steve, really among this. And I think it's worth pointing out that that soundbite we just played really tells you everything almost you need to know about what this relationship will really look like between not just the two countries, but the personal rapport that, President Trump always talks about. His personal relationships and how that is an important facet to how, I guess, he approaches things and his worldview. And that really underscores what he thinks and how he thinks about the new Japanese Prime Minister. And I think just to circle back to your earlier point, both of them have this really deep affection for former Prime Minister Shinzo Abe, which I guess really just underscores how close their relationship has even become in the last, just call it the last 2-3 hours or so, Steve.
Yeah, and I think it's a bit of a relief as well to Japanese authorities that their discussions have gotten off on such a very warm footing. And also Scott Bessent also hailing the expansionary policies that lifted the Nikkei 225 as well above 50,000, kind of takes the pressure, if you will, at least face-to-face pressure for the Japanese to address the issue of the weak yen at 152 to the dollar. So we are going to be shifting focus tomorrow as I also head to the airport and head to Korea. The next big meeting, of course, this is still going on, obviously, a working lunch between Trump and Takaichi-san. But Thursday in Korea, in Gwangju, down in southeast Korea, you're going to have that high-profile Trump-Xi meeting. Here we've heard as well recently from Nicholas Burns, the former U.S. ambassador under Joe Biden, by the way, to China. This is what he had to say about the Trump-Xi meeting coming up in South Korea.
I think the tension between the United States on trade issues is going to continue past this meeting. That's not a criticism of President Trump. It's actually more a criticism of the Chinese government and of the fact that they've been extraordinarily difficult on these issues. Overall, I'd say that, this is a very competitive U.S.-China relationship.
Yeah, so we're literally in this specific week following the news, as Steve was just pointing out, we're on the Tokyo lunch break. He's headed out to the airport quite soon. In case you're wondering where Yvonne is, she's also headed to Korea, where really all roads are leading to this week following the itinerary of the U.S. president and that meeting, of course, on Thursday. Before we get to that, though, just a very quick snapshot of markets and other themes that we're tracking here. So volumes are just not there. They're not there at all. Prices on the way down. So suffice to say, there's very little happening on the macro side of things, just given this wall of risk events coming through. It's not just geopolitics, right? You have everything from monetary policy decisions. You have massive earnings coming through across the world. So Asia Pacific is busy. I think this is the busiest week so far based on confirmed reporting dates. And then we get into Wednesday and Thursday, where really you have 10 hours of just manic headlines coming through. Flip the page, please. We'll talk about HSBC. And as we look at that, so you have everything from the Fed a few hours after that, big reports coming through a few hours after that. You have this big meeting taking place between the two presidents. I think we can worry about that on Thursday. All that is to say, before things get busy, big earnings report is coming through in about 90 minutes or so. HSBC is reporting. Certainly we'll be focused in on this recent transaction and what that means, in case you're curious what the forecasts are looking like. This is the prior one. This is the comparison. You do the math, of course, and that's what you get as far as some of the metrics are concerned. JAWS, as they say. Very quickly, so I alluded to this recent transaction. Our analysts at Bloomberg Intelligence have effectively said this plan to acquire the remaining stake in Hang Seng Bank, which broke, I think, about 2 or 3 weeks back, will likely dominate this earnings call, with the focus really on, number one, what it means for upside revenue strategies, given the fact that they had already owned the majority of that bank, and what happens with this and how they outline this, given, of course, that fairly hefty premium, Steve, that they paid for. And really, on the back of that, they then give up, of course, new buybacks, was the other thing that emerged from that transaction, Steve.
Yeah, that's right. I mean, a lot of issues that we're going to dig deeper into on the HSBC results. You know, Mark Tucker, the chairman, he's out there still searching for a new chairman and who's going to pilot the bank going forward through some of these, uncertain times. Joining us now is Lorraine Tan, Director of Asia Equity Research at Morningstar. Good morning to you, Lorraine. So what's going to be front and center for you? Yes, the conference call probably is going to dominate the take private the privatization, if you will, of Hang Seng Bank, but there's other issues. Private credit risks globally. There's, of course, this provisions tied to Bernie Madoff. But is Hang Seng going to be the primary driver of the narrative today?
Yeah, good morning. I think yes, very much so, because as you mentioned, they're paying a premium for the bank. We've actually factored in some synergies from the acquisition. Overall, we think it's a positive move. It helps maybe to provide better control over risks as well. Having said this, I mean, we do feel HSBC is fully valued. There's not a lot that would change our view from that at this stage because of the entire environment where we do expect slowing global growth, and that could raise some risks still. But overall, we'd like to see where the cost synergies are coming from.
Yeah, that's right. So you mentioned about the slower growing global growth. What's going to be the impact then on net interest margins for the bank as the interest rate environment also is going to be coming down?
Yeah, so you've got a few pressures. You've got NIM that's going to be gradually easing. We want to see how HSBC is managing and containing the slide in the NIM. At the same time, we've got very strong non-interest income growth that we're expecting, that the market has probably factored in already, given the robust U.S. banks earnings from that front. So we want to see how the strong non-fee or non-interest income can continue. We want to see how NIM pressures are contained. Overall, however, we're pretty much only expecting fairly flat earnings, maybe just slow growth over the next few years for HSBC. Not the only bank in this boat, but obviously whatever they do in terms of cost containment will help to buffer earnings over the next couple of years. So overall, we're pretty comfortable with HSBC at the moment, but we just want to see if there's potential for any heightened risks, if there's, on the flip side of that, growth that could be coming in a little bit better than we expected.
How about provisions for its Asia business or Greater China business? Obviously, I think the Bernie Madoff provisions that they announced, was it Monday or whenever, is a little bit separate because of the fraud case there over time. But in Asia, you had that interim results charge basically on the dispersion of was it BOCOM, right? So what kind of other provisions could we be expecting in the third quarter results, or do you think it's pretty much over?
Well, we would just hope that it's over. I mean, this is third quarter results. So the good news is that you don't have Hang Seng Bank reporting in 3Q. So maybe we won't see charges related to Hang Seng Bank. Having said that, given that the Madoff charge was a little bit of a surprise, we don't know for sure. But I think the bulk of, let's say, the China-related charges should be covered, given the outlook. We've seen some stabilization in the real estate occupancy rates in Hong Kong. So hopefully we're seeing the bottom of those risks, and so hence we're not really expecting a lot more one-offs this time around.
Yeah. Why can't they find a chairman? I mean, Mark Tucker is a pretty hard-charging guy. He's had 4 different CEOs, I believe, over his time. Is that something that's front and center, or just going to wait and see? We've been waiting for a while.
I think we just have to wait and see. I mean, luckily it's got obviously a strong operational team, so we're expecting it to be business as usual, whether chairman or no chairman.
Hey, Lorraine, do you have any thoughts? Obviously, we're going to be turning our attention in the Asia-Pacific region here to the Trump-Xi meeting that's going to happen on Thursday. I'm pivoting away from HSBC a little bit, but are there some front and center thoughts that you have on your mind about what could go right and what could go wrong?
Given that this is dominated and it's up and down for the past, several months, what we're hoping is at least some agreement with some hard numbers. We're still going to be skeptical in the fact that we do expect heightened risks from tariffs, from whatever geopolitics. I think that there's no escape from that. We do think, however, that it's more probably beneficial for China to have some sort of agreement with the U.S. We'd like to see China focus very much more on boosting domestic growth, boosting domestic consumption. We're hoping that if there's this trade framework in place, they're able to pivot to that more.
Yeah, positive, obviously, developments, a framework agreement. We'll have to see if the two leaders, when they meet face-to-face, they can actually put their signatures to it, or at least verbal endorsement of the different things that they've come to agreement on in Malaysia. Lorraine Tan, Director of Equity Research Asia at Morningstar, thanks so much for joining us this morning on The China Show. And subscribers can also turn to the terminal for more on HSBC's earnings, I believe coming out midday today. T-Live Go is your function for the latest updates, plus commentary and analysis from our expert editors. Plenty more ahead. This is Bloomberg.
Right, welcome back. I think we're back on air. Are we? I guess we are. Anyway, always be ready that your mic's hot, the camera's back on, and maybe two people are watching, one including my director. Anyway, that's just me buying time. We're looking at, what are we looking at here? Okay, so we'll have a conversation around renewables and this push towards solar, how much capacity is come online this year across that energy mix. What's interesting too is when you talk about AI, for example, which has really been a feature of this market, quite central if you think about it. One of the things that's emerged really is how we power this AI push, right? And nuclear has come out, for example. There is this, of course, gap in terms of supply and where that's going to come from to power just almost on a day-to-day basis another data center in another place in the world. And all that is to say, if you strip China out of the conversation from the solar push, how is the rest of the world actually doing, right? So that's certainly a conversation we'll be having out of Singapore in a couple of minutes or so. While we talk about that, can we just pivot as well and we look at, can we look at Chinese markets, please, if we can, because I want to look at that as well. So a couple of things happening in China today. One is, it's a big earnings day. We talked about HSBC. That's coming out in about an hour and 15 minutes. That's point number one. Alongside the earnings story, is the reason I'm going to just crowbar this in, if you will, because a lot of the earnings story, maybe with the exception of the Mag, 5 out of the Mag 7 might get attention, is that we're moving into this next 3 days of just central bank decisions, political headlines, maybe a framework, and hopefully more meat in the bones as it pertains to the trade deal between the U.S. and China. Or should we call it a trade deal? Should we call it a broader agreement, since it will feature more than just trade, for example? So earnings is a big story. On top of earnings, there's also this really big, I want to talk about this trading debut here today. So you have Sany Heavy, which is doing too well, but the other ones are actually doing quite nicely in the first day of trade. And that's just me saying that when you look at the trading debut today, can we talk about markets, please? We'll talk about solar in a moment. Is that today is actually the busiest day for cash calls in Hong Kong going back to July. So you have at least 4 companies hitting the market. And on top of that, November 6th, mark your calendars now, we have 4 more companies, 3 at least that I know, Pony AI, Re-Rides, among the companies that have set their pricing, I think, on November 4th. and then they're going to list here in Hong Kong. Trading debut is on November 6th. Anyway, that's just me getting carried away with my thoughts here. Anyway, okay, what did we talk about? Let's talk about solar. Why not? And renewable energy and this big push, of course. It's hard to ignore the sun. Okay, our next guest actually runs the International Renewable Energy Agency, which is the lead intergovernmental agency for this push towards what we alluded to earlier, energy transition. Let's bring in the Director General, Francesco La Camera, joining us from Singapore International Energy Week. Francesco, good morning. Thank you for joining us. We appreciate the time. In fact, we, I think, spoke almost this time last year, plus 4 days. I think it was October 22 was the date of the conference last year. And I think I remember one of the things you said back then was the direction of travel is clear. It's really the pace at which we look at these new installations of capacity. I wonder, from that point in time, we're 3 quarters into 2025. Are you satisfied? Are you happy with the pace that you've seen on aggregate globally this year?
So as far as today, I think that also in 2025 we are having new breaking records. If the preliminary data will be confirmed at the end of the year, we are moving to an astonishing 700 gigawatt of new renewable installer capacity. This means that we have never been so close to be able to put the ship in a pathway that is consistent with the achievement of the Paris Agreement goal. The impression that I have that we are really close to the last mile to put the ship in a safe way.
Okay, Francesco, I mean, this is a feature of the industry anyway, but I wonder, just temporarily for a conversation's sake, if we strip out China, which has really been not just a dominant player, but really the bellwether of this global push towards renewables, how would you describe the world's efforts and the status of the world's efforts to bring renewable capacity online if you exclude the efforts from mainland China?
So if you exclude China, and if we look at the data that we have from the last year, we see that we have also very good progress in India, in European Union, and also in the US. We broke a new record of renewable installer capacity in 2024. So naturally, the China role is still dominant, but progress is everywhere. In fact, the only area that are left behind are, unfortunately, Africa, and still Southeast Asia should be done better. So the world is progressing all around, but we are leaving behind Africa and Southeast Asia, and this could be really a great risk, not only from a moral or for the sense of justice, but from the fact that in these two areas of the world, the energy demand will be growing faster in the years to come. If we don't intercept this demand with clean energy, this will be very difficult to keep the ship in a pathway consistent with the achievement of the Paris Agreement goals.
Francesco, interesting that you mentioned Southeast Asia. Well, for one, you're in Singapore for this big conference. The reason I bring that up is the fact that it's lagging on this front, but also it's been a key recipient of Chinese investment in terms of renewable production capacity, yet it themselves lag as far as their energy mix is concerned. But what do you think is needed in Southeast Asia? Is it a regulatory push? Is it a funding push? Is it all of the above? What's missing?
So both of what you have said, we at ARENA, we have our narrative on what should be done to accelerate our pace, and this applies also for Southeast Asia. So here the first priority is infrastructure. So if we are not able to move the electron and the molecule into the Southeast Asia, this means that we have difficulties to put more clean energy into the grids. So first, infrastructure. The second is the legal environment. So we have still a market that is designed for fossil fuels energy system, not for the renewables. And the third is the capacity of the institutions, because a distributive energy system based on renewables could be better for the environment, better for energy security, better for social aspects, but it could be a little bit more complex to manage. And we also have to reskill the workers that are coming from the old sector to the new one, and also try to train and educate our young people as a professional for fitting better their professionality to the new energy system that is coming.
Francesco, thank you so much for the time. That's all we have time for, unfortunately. But let's talk again soon. Hopefully not this time next year. Certainly, hopefully somewhere in between. Francesco, the camera there of the International Renewable Energy Agency in Singapore for us. There's plenty more ahead here on Bloomberg Television. Welcome back. Before we wrap up the China show today, let me bring in Steve, of course, our co-anchor today, and really been out of Tokyo, really been an unorthodox news flow as far as the week is concerned. And Steve is in Tokyo, of course, covering the trip of President Trump, who then goes on, and I think Steve follows him on, of course. Steve, give us a sense of what's your literal agenda today and tomorrow?
Well, clearly there's been a lot of flattery between Takaichi-san and Donald Trump. They're building a relationship on a springboard of both of theirs admiration for the slain former Prime Minister Shinzo Abe. In fact, Takaichi-san gifting, according to the White House officials, a golf bag signed by the professional Japanese golfer Hideki Matsuyama, but including in that was Shinzo Abe's putter. So that was a very kind gesture by Takaichi-san that will obviously mean a lot to Donald Trump. They also, the two of them, signed hats that say, "Japan is back." That was a popular slogan of Shinzo Abe that Takaichi-san has taken up the mantle of, similar to "Make America Great Again." Go figure. Dave, been great.
All right, that's it from us. We'll see you all tomorrow.